It's a lot in Southern Dallas, Southern Fort Worth. All makes sense. A little lower price point. Rents aren't that much cheaper. So very much dominating rental investments on the south side. Um, Scroll through this. Keep scrolling, and then Dallas Fort Worth, from how we calculate it, had the second most rental properties purchased in any market nationwide. So that there's a ton of activity happening, ton of investors finding good deals, still making it work. Um, and then I will I'll keep going here. So this last section here is one I think is really important. Where it's just how risky is the market you're investing in, especially if you're holding on to a rental property. It's like, you want to hold that for 5, 10, 15 years. It's like it's an asset that you want to stay, to be good long term. So one of the great things about Dallas Fort Worth is it has a relatively low percent of investor owned properties going into pre foreclosure. So for all major metros, it's below average, where it's only about 1.2% of properties with how we calculate it is with a DSCR loan on it are in pre foreclosure, which nationwide, the average is about 1.5, which makes sense because even though some parts of Dallas, the market softened a bit, it's still such a huge hub for new jobs. The economy is doing relatively strong. Like overall, it's a very strong market compared to especially some of the higher yield markets. Like if you take a Milwaukee, you'll see higher top line yield there, but you also just your elevated risk likely aren't going to see the same home price appreciation. So I will stop there. That's probably data overload, but happy to answer any questions on that, or double tap into anything there.
Yeah, no, absolutely, man. That's amazing. I love how hyper local that data is. If anybody has a question, feel free to either drop it in the chat or raise your hand. We'll get you on the floor. If anybody wants to get this type of data for their business, Glenn, how can they do that? Can you guys help them through CFR analytics?
Definitely. So send me an email. We're about to roll out a product that shows exactly this, where you can just sign in and see everything. That should be live in the next 2 weeks or so. In the interim, we can pull reports like this as a one-off and just send it to them via email, but we'll have a fully built-out product where you can just log in and see everything in real time by end of month.
Okay, and I was seeing the timestamp. So you pull that today. How fresh is the data? How far back do you guys go, or how recent?
Yeah, so we're pretty fortunate. We get nationwide data updated daily. So our data updates in real time. It's lagged about 10 days from the recording date, though. So we're starting to get transactions from the second week of February starting now. So there's a little bit of lag there, but updates daily and keeps that lag time.
Okay, awesome. All right, guys. Any questions on the chat?
Ricky,
thank you so much, man.
Ricky
What's
wants
that,
to know, what app are you using?
His website is
Uh,
CFR
uh,
Analytics, right? Yeah. It's not an app. Use the app, Rick. Use the app
and
itself.
the app is coming. The app is coming.
He's a computer. Glenn, thank you so much for sharing with us. I appreciate you showing up and sharing a little bit of that. Thank you so much.
Thank you, Glenn.
Definitely. Thanks for having me.
I'm gonna have Brian Maddox. Are you around, sir? I hope you didn't get bored and left. Let's see if Brian is here.
So he raised his hand. Let me see here. Oh yeah, he's here.
Okay, I need Yuresh.
There, I am. There he is.
Yes.
Hello.
What is going on, my friend? How are you?
I am good. Thank you. How are you?
Good evening. I'm doing good. I'm doing good. Good to have you on.
Thank you. Well, I'm going to jump right in because I know time is tight. And I got to tell you, if you are not using Glenn Hull to do some data analytics, man, you are missing out. You need to make informed decisions, and I can't say enough about data. I focus a lot about that. So I'm going to do a little bit more national, and I'm going to share my screen here if I can get the right one to share. That's the screen. I have 4 screens, so it's hard to pick the right one. You see a map, yes? Okay, good. So we're going to look at national numbers. We're going to look first at some housing data. So this is 1 year change in prices between January 2025 and January 2026. And I tell you what, Dallas and a lot of Texas is a buying opportunity. Housing is getting a little bit cheaper. There is some inventory sitting out there. That means you can negotiate your deals. So this is showing the size of the metro is the size of the bubble, okay? And then the color of the bubble is the heat map of did we lose value in the last 12 months or did we gain value? If you want to look at data another way, this is the change in home prices in America, the top 50 metros in America. And you can see Dallas, Tampa, Miami, Orlando, I'm sorry, Austin, and then Dallas. I have Dallas on the mind. So there is some buying opportunities in the state of Texas, and there's a lot of Texas on here. So as an investor, you know, if you're selling right now, that's not cool. But if you're in buy mode, you want to see some house price disruption because it gives you some opportunity. So this is housing inventory, a shift between last year and this year. And we've seen things slow down a little bit. We've seen the pace of new inventory come into the market slow down just again a bit. And again, the size of the bubble on here is the size of the metro, and then the color is going to show you what the percentage of change. And we do have, I'm in the North Carolina area, and we have a lot of extra inventory in some of our neighborhoods over here. Dallas and Tampa used to be really hot on these maps, and a lot of Texas, and it has slowed down just a little bit, which is good news. We're now going to shift into jobs. Jobs really tells us what is happening in the marketplace. When you go to the doctor, they take your pulse. That is a leading indicator of health. Well, jobs is a leading indicator of health for the economy. And if you want mortgage rates to go down, I don't wish this with you or any of your friends, but we need unemployment to come up a little bit. That will help mortgage rates get better. So when we look at the big picture, we see these trends like the U.S. labor market, and we have very little growth in 2025. And this is not a trend that you want to see if you're rooting for the health of the U.S. economy. But if you're rooting for cheaper mortgage rates, this has been beneficial, and we are seeing some positive gains because of that. I wanted to look at, sorry, I jumped around here. The Fed Watch tool. So this is kind of what predicts what's going to happen to the Fed. If we look at the last Fed meeting, the Fed controls overnight rates to banks. They do not directly affect mortgage rates. But the last 4 times that the Fed cut rates, we did see mortgage rates get lower the week leading into the Fed rate cut. So if we look at the March numbers, we are not expected to see a Fed rate cut. Same news for April. There's only a 20% chance that we will see a cut. This is saying 79% chance we won't see a cut. But in June, we have a new Fed chair coming into office, and there is a pretty good chance, 60%, 58% chance that we're going to see a rate cut.